So the bears tried to break in, but guess what? The market is still near all-time highs. And in this video, I want to go ahead and touch on a couple of things that we want to be mindful of, especially if you're paying attention to what's going on in the overall markets, because it's leaving a lot of people to kind of scratch their heads. They're like, what's going on? There's so much uncertainty with the government shutdown. What are the ramifications of tariffs? And then of course we have headlines like this with the CEO of GoFundMe saying that a majority of the people are using the site to crowdsource for groceries. So it's honestly kind of not a good time in the economy, but we're still seeing markets push up. And so I want to go ahead and talk about a couple of reasons why, starting with number one, and that is earnings. See, what we're currently seeing right now is that in the middle of this earnings season, about 86% of the companies that have reported are beating Wall Street's estimates. So that's honestly pretty bullish. That's good news, because that means that fundamentally the market is pushing up because the numbers are looking good. But I want to also share something that I actually shared a few days ago for those that are insiders at Push and Profit Research, and that's this chart right over here. See, we're in a big week for earnings, but the largest week for this quarter is honestly going to start next week on the 27th through the 31st, right? So that's where we have 44% of the companies within the S&P 500 reporting earnings. And so this could have a huge change on the overall market, because of course we have a lot of companies reporting, but not only just a lot of companies, the largest companies. For example, if you take a look over here, we have Meta, Microsoft, Alphabet, Apple. So it's going to be a huge week next week, especially because we have these mega cap names reporting, and we know that the mega cap names, they have a huge weighting in the overall S&P 500. And so if they perform poorly, well, guess what? Then we could start to see a U-turn. But if we see them perform pretty well and hold up with the numbers like what we're currently seeing with a lot of the other companies, well, that's pretty good news. And of course, earnings, there's a lot of nuance. It's not just the numbers, but it's also the forward guidance. Like, what are we looking at going forward? And so if we have a lot of positive data from these companies and a lot of positive commentary during the earnings call, then we could honestly still see the market pushing up into the new all-time highs territory. Now, I want you guys to understand this. The Magnificent Seven makes up about 37% of the S&P 500. And so that's the reason why I focus on these mega cap names. It's not just because I'm like, oh, I really like Apple, or I really like Meta. Now I do like these companies, of course, right? I've talked about the Meta glasses before, etc. But the reality is that these companies have a huge influence because of their weighting in the S&P 500. But one thing that's pretty interesting, right? You're gonna say, oh, well, is it these large companies that's propping the market up and everything's on fire? And I want to show you guys something pretty interesting. What I often talk about is looking at ticker symbol RSP, which is the S&P 500, but equally weighted. And we see that the S&P 500 equally weighted is also near all-time highs. And so what that means is that pretty much regardless of the huge weighting from the mega cap companies, the overall market is pushing up. And so when you have the overall market, meaning all the other companies, not just the big names, but all the other companies having strength, well, that means that the bull run, right, can still continue. And so I'm sorry for the bears. Now, by the way, I don't know if I addressed this. The bear video in the beginning of the video, of this video, was AI, right? AI slop, right? So hopefully no one thought that was real. You guys are probably going to be seeing a lot more ridiculously fake AI content as AI continues, right? That's just the nature of what we're in. And it's honestly looking pretty good. I'm not going to lie. Some videos have me pretty convinced. I'm like, was that real or was that fake? And you just can't even tell these days, honestly. Like before, when AI videos first came out, you're like, that's AI. But now it's kind of believable. But yes, that was just fake, that whole bear thing. But nonetheless, the bull run is still pretty much on track to continue as long as the fundamentals still look solid. And of course, I don't have a crystal ball, but there's a high probability that we're gonna have some good earnings from a lot of these mega cap companies because of AI, right? Now, I wanna also talk about something else, and that's to highlight this report we got over here from the retail survey sentiment. See, retail is still pretty bearish on the overall market. Now, they're not as bearish as they were last week, but they are still pretty bearish. And the reason why I often look to this report that comes out every Thursday is simply because we often like to use it as a contrarian view. See, when the majority of retail is bullish, that's when you're like, oh, maybe it's time to kind of trim positions, right? You want to do the opposite of what the majority of retail is doing. And so what we're seeing is that the majority of retail is actually pretty bearish. Not as bearish as before, but they're still bearish. And of course, what we see for the end of the week is the market, when we're looking at the heat map for the week, pretty green, right? So kind of just telling again that, it's kind of like a contrarian view. Just do the opposite of what the majority of retail is doing. But it's not that simple, right? I wish it always was. But I want to go ahead and, hop into my laptop and just talk about a couple of things that we also want to be mindful of. Of course, we want to be really aware of what we got coming on tomorrow, which is a CPI report. Now, I'm going to go ahead and hop into my laptop, but before I do so, just a friendly reminder to hit that like button. If you haven't done so already, it really does help out with the channel. Make sure to subscribe if you're new to the channel. And with that said, let's hop into my laptop. Alrighty, so we see the S&P 500 have yet another bullish candle. And actually, I want to go ahead and take a look at Intel, because Intel just had their earnings today, and this kind of alludes to what I was saying earlier. Look at that earnings. We have a nice little pop. They actually beat on the top and bottom line. So earnings season is kind of showing this robust strength, which is bleeding into the overall market, right? When we look at the S&P 500 from an intraday perspective, we pretty much respected the 50-period exponential moving average. We didn't break below it at all. We take a look at the daily time frame, and a lot of people are calling this a top, but we really haven't broken down any major areas to show like a huge change in the structure of the market. The market structure is still intact, and I know we had this big blip here, but it's kind of getting resolved, especially with the geopolitical tensions kind of easing, right? We had President Donald Trump mention today that, he's going to be having his meeting with President Xi next Thursday, right? So that's pretty optimistic. And right, this idea of tariffs in China, it's already kind of softening, that we're not going to have tariffs really get any crazier, right? Of course, we've talked about this on the channel called the Toggle Trade, right? Trump always chickens out, where we hear kind of this harsh talk, and then we end up seeing that it's actually a negotiating tactic to go ahead and ease things further on. And so honestly, it's not too bad despite the headlines that you read of what's going on in the economy. Now, yeah, things are bad, right? We still have the government shutdown. There's, talks about food stamp, the SNAP benefits going away for a lot of people during Thanksgiving. So it's bad, but you have to kind of stay away from the headlines. And one thing you have to separate when you're looking at the market is Main Street is significantly different from Wall Street. And we've seen this so many times, but a lot of people get this mixed up. They think, well, if my neighbor is not doing good, then Wall Street's not going to do good, right? And the interesting thing is it's a completely different dynamic with Wall Street, right? Because a lot of these mega cap names, first of all, right, they don't sometimes have to rely on the consumer. Sometimes they get their business from other businesses investing, right? And so that's why Wall Street can continue the momentum while Main Street is kind of suffering, but it's not too terrible for the majority of Main Street. Now, as we go into 2026, if we don't have the pressures from monetary policies ease up, then that could be a huge concern and a red flag. And we may end up seeing, the first two quarters of 2026 be kind of rough. But ultimately, what we want to pay attention to so far at the time being is earnings and also this upcoming CPI report, right? We're getting the CPI report that was delayed because of the government shutdown tomorrow. And if we have a report that's on par to keep the Federal Reserve on track for cutting 25 basis points, well, then that's all the merrier for the stock market to continue rallying. And so that's why there's kind of this big disconnect. Like, how is the market rallying when things kind of seem bad? Now, we actually this is really interesting. We look at the relative strength index, the RSI, and, it's kind of this bounded indicator where when it gets close to 70, that's considered overbought. If it's close to 30, that's underbought, right, or oversold. We're kind of in the middle. right? And so despite being near all-time highs, it's not like the market is kind of accelerating at these overextended levels. And I know this sounds crazy, but we could see the market continue to push up. But with that said, hopefully you guys got some value in today's video. Make sure to like and subscribe. And before you guys go, make sure to check out this video over here where I talk about my strategy for what I look into when I go into buying into a stock and building a position. And with that said, I'll see you guys on that next video. Take care, guys.